All right, so the April numbers are out for Calgary, and I think the big headline here is that we're not in the same market as we were a year or two ago. And I know that sounds obvious, but it's actually really important because a lot of people are still mentally operating like it's peak chaos market. You know, everything sells in 12 minutes. Buyers are sprinting around with the blank check, and sellers can basically price their house based on vibes, astrology, and what the neighbor's cousin got in 2022. It's just not that market anymore.
No, and I think that's the bit that people need to hear. The market has not crashed, despite what Uncle Pete is saying at the barbecue after having one too many beers and maybe reading too many headlines. It has changed, Pete, just not to the degree that you're oversharing. April sales were up from March, which is normal for spring, but they're still down compared with last year. Calgary saw 2,104 sales in April, which is about 6% lower than April 2025. So the activity is there, but the urgency has cooled off.
And the reason for that is pretty straightforward, Tom. People have more choice now. Inventory is up, new listings are up, and buyers are not forced to make decisions to the same level of panic as we've seen in recent years. The chief economist at the Calgary Real Estate Board, Ann-Marie Lurie, summed it up pretty well. The market is shifting away from the intense demand that we saw when migration growth was really driving things forward. More supply across housing spectrum has reduced that urgency, and Calgary's moving towards a more balanced condition. But, and this is a giant flashing neon but, not every segment is behaving in the same way.
Yeah, that's the key point. Because when people say, how's the Calgary market? The honest answer is which market? Detached homes are doing something different from apartments. The west side is doing something different from the northeast. Airdrie is different from Cochrane. Cochrane is different from Okotoks. It's not one market anymore. It's a collection of mini markets, all doing their own slightly chaotic little dance.
It's kind of like a housing market Congo line, but half the room's moving smoothly, and the other half have probably had one too many tequila shots and kind of lost their rhythm a little bit there. Overall, Calgary had 5,973 units of inventory by the end of April. That's almost 2% higher than last April, and months of supply sat just under 3 months. Generally speaking, that points to a more balanced market. But when you split it into detached homes, we're sitting at just over 2 months, where apartments are sitting over 4 months now. That's a completely different experience dependent on what you're buying or selling. So, Tom, what's the detached market saying?
There were 1,095 detached sales in April and 1,863 listings. Inventory did rise slightly month over month, but there were still only 2,468 detached homes available. And importantly, detached inventory is still lower than last year and below long-term trends, which is why detached homes are still holding up better than a lot of people might be expecting. The benchmark price for detached homes in April was $745,400. That's up March, and the year-over-year decline has eased under 3%. So detached prices are lower than last year overall, but they're not falling off a cliff. In fact, in some parts of the city, detached homes are still performing very strongly.
That's especially true in the Northwest, West, and South districts, where months of supply is under 2 months. That's still very much seller's market territory. And when supply is tight, good homes are still moving. Not every home, not every price point, but good homes priced correctly in tight supply areas are still seeing solid demand.
Yeah, exactly, Greg. And then you've got the Northeast where conditions are much softer. CREB noted that Northeast favored buyers and prices tended down month over month. Detached benchmark price changes ranged quite widely from an 8% year over year decline in the Northeast to a 2% increase in the West District. That spread's massive. What do you say to that headline, Uncle Pete?
Yeah, Uncle Pete. So when someone asks, are detached homes down or are detached homes up? The answer really varies on where you're talking about. What about semis?
Yeah, semi-detached homes were also pretty steady, actually. Year to date, there have been 700 sales and 1,190 new listings, which is very similar to last year. In April, the sales to new listings ratio and months of supply both sat at the lower end of balanced conditions. Benchmark price reached $690,000.
And the semi-detached are interesting because it often sits in that middle ground. For buyers, it's the compromise between wanting detached style living without wanting detached pricing or condo fees that come with a townhouse. Prices have been gaining over the past 3 months, and we're now only slightly lower than last April. Again, location matters. Prices rose month over month in every district except the northeast, and the east, where the supply is higher. So the same pattern continues. Tighter supply equals stronger pricing. More supply equals more negotiating room.
Yeah, Greg, and that sounds obvious, but it's amazing how often people want one universal answer. They want to know, is it a good time to buy or is it a good time to sell? And the real answer is it depends on what you own, where it is, what you're buying, what your timeline is, whether your expectations are attached to reality or floating around in the clouds somewhere with a balloon tied to them.
This ain't up, people. Get real. Okay, now, townhouses. Sales, new listings, and inventory all increased from March, which is pretty normal for spring market. But year to date, sales have pulled back faster than new listings, so inventory is higher than it was last year. Months of supply is sitting around 3 months, so overall, townhomes are seeing more of a balanced market condition.
Yeah, I'm going to start sounding like a broken record, but balance does not mean the same everywhere. Northeast had the highest months of supply and the steepest year to date price adjustments, with prices down 11%. Meanwhile, the West District had the smallest price adjustments, with less than 2% decline year to date. That's a huge difference.
And ultimately, this is why pricing strategy matters so much right now. In a rising market with low inventory, pricing mistakes can sometimes get hidden. The market bails you out. Someone comes along and pays the number anyway. In a more balanced market, the market does not bail you out. It can really be quite punishing. If you overprice, buyers notice. If better options are sitting nearby, buyers notice. If your property needs work and the one down the street doesn't, buyers
Buyers
notice.
notice.
The market has become a lot less forgiving.
Now we need to talk about apartment condos, because this is where the market is clearly softer. Apartment inventory rose to 1,920 units in April. That's nearly 3% higher than the last year and 27% above long-term trend.
Ouch.
Months of supply is over 4 months, which means conditions continue to favor buyers.
And that really is putting pressure on prices. The apartment benchmark price in April was 301,400, which is slightly higher than March, but still almost 9% lower than last April. And that is a big year over year adjustment.
And again, some of the districts are feeling that a lot more than others. Calgary Real Estate Board noted that the steepest declines were in the Northeast, East, the North, and the Southeast districts. Apartment condominiums are probably the segment of the market where sellers need to be the most careful. Because if you're selling an apartment right now, you are not just competing with last month's sales down the hall. You're competing with resale inventory, investor owned units, newer buildings, older buildings, rental alternatives, condo fees, special assessment concerns, and buyers who can have more choice than they've had in a long time.
Exactly. And buyers have the ability to be pickier. They're looking at condo fees, they're looking at the reserve fund in greater detail. They're looking at building age, management, amenities, parking, storage, pet policy, short term rental restrictions, a lot of other things. It's not enough anymore to just say, well, it's a condo in Calgary, so it should sell like we saw in the last couple of years. That worked better when supply was ultimately tighter. Right now, apartment sellers need to be sharper on the price, presentation, and positioning. So, what does this all mean for buyers, Big T?
Well, Greg, for buyers, the message is not you can now go in and lowball everything like it's 2009, although a lot of buyers want to think that. That's not where we actually are. But there is more breathing room than there was.
I think breathing room is the right phrase there. In some segments, especially apartments and certainly townhouse markets, buyers may have more room to negotiate, more time to compare options, and less pressure to make rushed decisions. But in a tighter detached market, somewhere on the west side or the northwest, for example, good homes can still move quickly and people don't have that same luxury. So buyers need to understand the market that they're actually shopping in. A detached home in a low supply west side community is not the same as an apartment condo in a high inventory area like Beltline right now. These are two completely different games.
What about sellers, Greg? What do they need to know?
Well, for sellers, the biggest takeaway is that pricing really matters again. Not that it ever stopped mattering, to be fair, but in a hotter market, sellers had a much bigger margin for error. That margin is shrinking massively.
And that's the bit that really should be emphasized again. This is not a bad market for sellers, it's just a more selective one. If you're in a detached home in an area with low supply, you may still be in a very strong position. Lots of people are. But if you're selling an apartment or a property in an area with higher inventory, you need to be a lot more strategic than you needed to be a year ago. You need the right pricing, strong presentation, good marketing, and a clear understanding of what your competition actually looks like. Because buyers are comparing, as you said earlier. And when buyers have options, they become ruthless little spreadsheet goblins.
It's very true, Tom. They'll compare price per square foot, condo fees, layout, updates, parking, exposure, floor levels. I can ramble on all day long. Ultimately, they're going to compare every little detail.
And fair enough. When you're in a market like this, you can do that for certain segments. When people are spending hundreds of thousands of dollars, they should be picky. That's reasonable.
So, if you're trying to figure out what this means for you, whether you're buying, selling, investing, or just, reading the headlines, this is exactly the kind of conversation that we're very happy to have with you. This is not a you must act now before the moon changes shape kind of chat. Just a proper look at your situation and what the numbers actually mean.
He's Greg.
He's Tom. We're Square One. See you next time. Thanks.